Hello guys, welcome in today's crypto technical analysis. Today we're going to discuss the BTC price action alongside with the on-chain data analysis. Before we start, I've got a small request as usual. If you guys are learning and enjoying from the contents, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. Well, we saw a sharp decline, heavy decline in the market. If we're going to recap from the previous videos, that as soon as we saw the long-awaited $68,000 and $70,000 that were reached to our target level in between $69,000 exactly, if we take our Fibonacci level, we came right inside the 618, the golden pocket, and we started dumping. So that was initial entry. However, high probability setup came at around $63,000, $63,500 with the old support level. And as soon as we saw a sharp decline, and as you can see, number of times we tried to test the strong resistance, dollar to dollar, week to week rejection. Second time we tried to test it. However, if you remember, we had a 382, the Fibonacci level as well, high time frame Fib levels. At the same time, we kept printing a higher low structure in the market. So we couldn't change the market structure. As a result, we saw a heavy dump in the market. However, the target level was around $50,000 and $48,000. But we didn't really expect that the BTC price will dump all the way up to $42,000. So as a result, anyway, we didn't take a long, but we were taking a short from 66,000. Ideally, the level for the high probability, as I said, the short level opened, and then since then we were targeting this support box at around $48,000. So as you can see, depends where you entered from 618, the golden zone, you had over 25% profit. However, as I said, from $63,000 all the way to the $48,000, we had over 20% profit. So that's around 230%, 10 times, 5 times, over 115% profit in about 2 weeks. So these are the old levels, and we've got completely new support and resistance lines. Before we move on to multiple time frame analysis, if you're interested to learn the technical analysis, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and 101 intense masterclass is available, where I'm going to teach you how to become a profitable trader in the market, and it only takes you 5 to 10 hours to master this all. During the course, you will learn day trading, i.e. scalping, swing, and as well as the long-term as an investor trading systems. Let's take a look at a weekly time frame. In order to be fully bullish on the weekly time frame, we have to stay above 52,000, ideally 52,500, and then we are good to go. However, it is very early for us to talk about it at this stage because lower time frames as well as other high time frames are heavily under the bear's control. So moving on to a daily time frame, we're going to analyze the daily time frame. In the last few days, I was saying as long as we're going to be below this point of control, which is around $57,000, $58,000, all the way down to $48,000, the daily time frame will be under the consolidation. As soon as we started dumping, we tried to get down to the consolidation level. However, it didn't work, and we saw a massive dump in the market. So at the moment, daily time frame is trying to, as long as we're going to be above the line of 49,000, 48,500, the daily time frame will enter back to the consolidation level. However, daily time frame started giving us a bearish signal. The levels that we need to watch on the daily time frame is going to be this strong resistance. As long as we're going to be below the $56,000, $57,000 daily time frame will be under the consolidation in this region. If we lose the $48,500, $49,000, highly likely the price action will go and then test in the first place this point of control, which is 43,200 level all the way. We may also see SFP, and we can claim, and then we will see what will happen in the market. Moving on to the 4-hour time frame. In the last few months, we've been playing with the 4-hour time frame, and it was extremely important for us to see the price action move to the 4-hour bullish territory. However, the structure is completely changed. Even though this is the level for 52,000, 51,500 level is going to be resistance, even though we're going to break this 4-hour resistance, either clean breakout or claim it as a support, and then we will have this higher time frame strong resistance level. So the 4-hour became less effective. I'll be watching 56,000 all the way up to $57,000. At the moment, we're in a no man's land, so if we're going to take a Fibonacci level again, depends how much we're going to dump. If we're going to see a rejection from the lower line of this resistance, we might dump all the way up to the 0.618, which is going to be around $44,900, $45,000. Maybe the maximum pay may come all the way up to $43,000, which is a high time frame point of control. So the levels on the mid time frame and the lower time frame, Fibonacci levels are clear. At the same time, even though we're going to claim this resistance as a support, we've got heavy resistance. Otherwise, because as I said, we're in a no man's land, we have the Fibonacci level at the same time, $44,500, $44,000. Maybe we can go all the way up to this point of control. So this is a two scenario. You have to play level to level, and this zone is extremely dangerous. I would like to draw your attention to realized hodl ratio on-chain data analysis. If we're going to look in the short term, we might enter into bear market under mid and higher time frames. However, as I said, the weekly time frames as well as other higher time frames are extremely bullish at this stage. So this is a resistance. If we put it, this red zone is a resistance and this blue zone is a support. So as you can see, red line chart is a ratio for the hodlers. However, the blue one is a price action. So as you can see, in 2011, the bull market, the hodl ratio went all the way to the resistance, and then we saw a massive dump in the market. 2013 bull market, similar thing that we can see. 2017 as well, we saw the similar stuff. And then we saw a massive correction in the market and we moved to the bear market. At the moment, as you can see, the realized hodls ratio is very far from the resistance level. As long as we're going to be below the resistance, we can assume that we didn't complete this bull market cycle. However, you have to be cautious to analyze these data. We've got many on-chain data and we will be looking other on-chain data in the coming videos. And we came to an end of this episode. If you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching and I'll see you in the next episode.